Dow closes down 600 points. Nasdaq enters correction after weak jobs report. Live updates: stocks fell sharply on Friday as a much weaker than anticipated jobs report for July ignited worries that the economy could be falling into a recession. The broad market index dropped 1.84% to end at 5,346.56. The Nasdaq Composite lost 2.43% to close at 16,776.16, bringing the decline for the tech-heavy index from its recent all-time high to more than 10%. The Dow Jones Industrial Average fell 610.71 points, or 1.51%, to finish at 39,737.26. At its session low, the 30 stock index was down 989 points. Stocks sank after July job growth in the U.S. slowed more than expected, while the unemployment rate rose to the highest since October 2021. Nonfarm payrolls grew by just 114,000 last month, the Labor Department reported, a slowing from 179,000 jobs added in June and below the 185,000 expected by economists polled by Dow Jones. The unemployment rate increased to 4.3%. The 10-year Treasury yield fell to its lowest since December, as investors flooded into bonds for safety on the fear the Federal Reserve made a mistake this week by keeping interest rates at current levels. Some megacap names saw steep losses during the day, as Amazon's second quarter results sparked investor concerns about big tech's blowout levels of artificial intelligence-related capital spending. The e-commerce giant slid 8.8% after missing the street's revenue estimates and issuing a disappointing forecast. Intel, meanwhile, cratered 26% after announcing weak guidance and layoffs. Nvidia lost 1.8%, following a 6% loss a day before. The Nasdaq is the first of the three major benchmarks to enter correction territory, down more than 10% from its record high. The S&P 500 and Dow were 5.7% and 3.9% below their all-time highs, respectively. Friday's declines are a natural course in a bull market that is reverting after its steep uptrend, LPL Financial Chief Technical Strategist Adam Turnquist said. The Nasdaq was very overbought coming into July. Same thing with semiconductors. And a lot of that AI enthusiasm hasn't really had a reality check at this stage, he said, adding that it's not the end of the AI story. But it was more than just technology stocks that saw selling on Friday. Bank stocks were slammed on the recession fears, with Bank of America off 4.9% and Wells Fargo down 6.4%. It has been a volatile week, with the S&P 500 moving more than 1% in each of the past three trading sessions. The stock market had rallied Wednesday when the Fed gave a strong hint that a rate cut was coming at its next meeting in September. After Friday's weak job figures, many investors are starting to believe the central bank should have acted on Wednesday. Though the numbers indicate the so-called SOM rule has been triggered, the developer of the indicator said the economy is not in recession. We are not in a recession now, contrary to the historical signal from the SOM rule, but the momentum is in that direction. Claudia Somm, chief economist at New Century Advisors, said via email. A recession is not inevitable, and there is substantial scope to reduce interest rates. The rule states that when the unemployment rate over a 3-month period averages 0.5 percentage point above the 12-month low, the economy is in recession. The jobless rate rose to 4.3% in July, bringing the 3-month average to more than 4.1%, compared to the 3.5% 12-month low. However, Somm said in a recent Substack post that the rule is likely overstating the labor market's weakening due to unusual shifts in labor supply caused by the pandemic and immigration. The SOM rule is currently sending the right cautionary message about the labor market cooling, but the volume is too loud, she added. With the market selling off and the Nasdaq Composite entering correction territory on Friday, a collection of stocks could help investors ride out the volatility. The CNBC Pro Stock Screener tool turned up a handful of names with low volatility and a strong dividend return yield that could give investors a safe haven and still provide growth. The names on the list span behemoths in the fast food industry as well as a premier defense contractor. CNBC Pro subscribers can read the full story here. You can also check out the CNBC Pro Stock Screener tool and customize your own screens.